The EUR or US pair is strengthening above 1.165 as we approach the release of US PCE inflation data, which is expected to show a monthly increase of 0.3% and an annual increase of 5% in June. This would be the highest year-on-year increase since the data series began in 1996. Will the Fed react to these higher inflation readings by speeding up its tapering or even hiking interest rates sooner than expected? If so, this could put downward pressure on the USD and help the euro to strengthen further. However, if the data disappoints and comes in lower than expected, then this could cause the USD to strengthen and the euro to fall. In either case, the reaction function of the market is likely to be muted given that the data is already priced in. The market is currently pricing in a 70 probability of a 25 basis point rate hike by the Fed in September. However, if the inflation data comes in higher than expected, then this could cause the market to price in a greater probability of a rate hike in September and potentially even in July. Looking at the technicals, the euro is now trading at its highest level since April 2018. The 1.16 level was broken to the upside with ease, opening up the potential for further gains towards the 1.17 level and the 2018 high of 1.176. A break above this level could then see the euro rising towards the 1.18 level. The momentum indicators are currently in the overbought zone and the MACD has just generated a buy signal. This is all suggesting that the short-term trend is upwards and that there is potential for further gains. However, it is worth noting that the RSI has been in the overbought zone for some time now, and a move into the 1.18 second could see the 14-day RSI generating a sell signal, which could then lead to a short-term top being in place. The market is currently pricing in a 70 probability of a 25 basis point rate hike by the Fed in September. However, if the inflation data comes in higher than expected, then this could cause the market to price in a greater probability of a rate hike in September and potentially even in July. In terms of key levels to watch, the 1.165 level was broken to the upside with ease, and this now becomes support. The next level of support is at 1.16 followed by 1.155. On the upside, the 1.17 level is the next resistance followed by the 2018 highs of 1.176 and then the 1.18 level. Disclaimer: this is not financial advice.